Have you ever wondered what happens to your loans when a loved one passes away? Today, we'll explore whether a bank can claim loan amounts from a wife after her husband's death. When a husband passes away, his estate, including any outstanding loans, may need to be settled using his assets. The wife typically isn't personally liable for the loan unless she co-signed it or is jointly responsible. This means that if she didn't co-sign, the bank's recourse is limited to the husband's estate. If the wife did co-sign the loan, she becomes legally responsible for repayment upon his death. In such cases, creditors can pursue her for the outstanding amount. If the husband's estate lacks sufficient assets to cover the loan, creditors might have a claim against his assets, but generally not against those solely owned by the surviving spouse. Now let's dive into the specifics of community property states. In 9 states, including Arizona, California, Idaho, Louisiana, Nevada, New Mexico, Texas, Washington, and Wisconsin, a spouse may be responsible for the debt if a borrower dies. In the 10th state, Alaska, community property is optional, but if the spouse opted to own property as community property, the spouse is responsible for the debt. It means that if you live in one of these states, you might be liable for your spouse's debts through commonly held assets. Even in states without community property law, the situation can get complicated with jointly held debts. If you were on a joint account with someone who passed away, you remain an account holder and will likely to be responsible for debt payments. This is similar to co-signers, where you are typically responsible for their debt. It's important to note that if a debt collector tells you that you were a co-signer but you believe you were an authorized user only, you can ask for the debt collector for evidence. Now let's discuss joint bank accounts and beneficiaries. A joint bank account holders generally have the right of survivorship, which grants the surviving account holder ownership of the entire account balance. The joint owner becomes the legal and equitable owner of all funds in a joint account at the instant of death. It does not become part of the probate estate. If the account has a payable on death beneficiary, the bank account balance goes to the beneficiary after the last account owner dies. The beneficiary process is outside of probate. Regardless, when there's no joint bank account, holders or beneficiary, the account becomes part of the deceased owner's estate. It is settled during probate, wherein the court oversees the distribution of assets according to the deceased will or special laws in the absence of a will. If the bank isn't informed of the owner's passing and the account goes dormant, the account may be subject to entreatment. Creditors may attempt to claim funds in a joint account to satisfy debts, but the funds are typically not considered part of the deceased estate and should not be used to satisfy outstanding debts of the estate. The surviving account holder must provide the bank with a death certificate or other documentation to confirm the debt and the update account records. The joint account holder may have the opportunity to remove the deceased from the account or open a new individual account. If you are neither a joint owner nor an account beneficiary, a court must grant you the power to withdraw money from the account. For example, an executor must produce proof of executor status and a certified copy of the death certificate to collect funds and place them in an estate account. Without proper authorization, it's illegal for anyone to attempt to withdraw funds from a deceased person's bank account. Let's briefly touch on what happens to different types of debts after death. Co-signers and joint credit card holders will almost certainly be held responsible for credit card debt. If the deceased person had an individual account, then it would largely depend on whether they lived in a community property state or not. Mortgages typically have a due on sale clause that means the loan must be paid in full before ownership can change hands. But this isn't applicable if it's transferred to an heir after a borrower's death. Federal student loans will be discharged on the date of borrower's death, but private lenders are not legally required to cancel student loans upon death. Whether a bank can claim loan amounts from a wife after the husband's death depends on her legal obligation as a co-signer or the existence of joint assets. If not co-signed or jointly liable, the bank's recourse is typically limited to the husband's estate. Understanding these intricacies can help you navigate financial responsibilities and protect your assets effectively.